Good day, everybody. It's your guy here, the unknown, and today I want us to look at something very important. As you already know, this is the easiest strategy that keeps giving over and over and over again, and I love it because whenever we come to our charts, we are looking for the same thing each and every day. So that in itself makes the whole thing very easy. Okay, so look at this, guys. We have 5 criteria, and as I said in the video that I posted early, it is a video where I went into detail on all of these criteria and everything. Okay, so you can just go and watch it. So I did tell you that we have 5 criteria, and this criteria actually helps us sit on our hands or know exactly when not to execute. Okay, because the main challenge is people don't know when not to execute, and whenever they try to execute when they are not supposed to execute, they end up losing. Okay, so these criteria helps us sit on our hands and know exactly when not to execute. So I'm gonna jump to a 5 minute chart. Okay, as you can see. Okay, uh okay, let me go to a 15-minute chart so that I can zoom this out, because there are people who want to see the details. As you can see here, okay, who is trapped when the session is opening here? Obviously, everybody who sold is trapped. Okay, everybody who sold is trapped. Okay, so literally everybody who went down is literally trapped. Okay, and this is the lowest point where price reached. Okay, so these guys over here are trapped. Okay, and we know that. Remember, we have 5 criteria. The first one is identify trap volume before the session. The second one is wait for the equity opening time. The third one is identify trap volume during the session, which is highly important. Then we wait for our evidence candle, and then that's when we execute. Okay, so look at this. These guys are trapped, and we already say that most of the days they are not gonna release these guys, which is why we always try to identify who is trapped. Although some days we won't be able to do that, because sometimes they will just trend and trend and trend. Okay, in that case, yes, we can pause the first criteria and move to the second one. However, we cannot move past the second one if it is not met, and that is to say, the second criteria is the prerequisite for jumping to the third criteria, and the third criteria is a prerequisite for jumping to the fourth criteria. So if the obviously the second will be met because it's equity time. So if the third one is not met, we can never ever jump to the fourth one. Okay, and this is highly important. So if the third one is not met, you don't have any execution on the day. Okay, so I believe you are well aware of this. Okay, so look at this. These guys over here are trapped. Okay, people going down are trapped when the equity opens. Okay, and I'm doing this obviously 5 to 10 minutes before the session opens. Okay, I will just mark this as trap volume, right? This is trap volume. Okay, so since this is trap volume, we are gonna jump to a 1 minute time frame, and that's where we're gonna wait for what? For the equity session to open. Okay, as you can see, this is where the equity opens. What do? They go down and they go down. They come and bounce on the level closing, the closing price. Okay, and then after bouncing here, what do? They go up. Okay, what do they do up here? They start sending people up, sending people up, sending people up, sending people up. What do you see? Okay, because our first criteria obviously was met, we were able to identify trap volume, and then our second criteria was met. This is now 9:30. Okay, which if you're in South Africa is 3:30. Okay, so this is the equity opening time over here. Okay, so the second criteria is met. Now we have to go to the third criteria, and this is important. This is a prerequisite for going to the for going to the fourth criteria. So if the third criteria is not met, we cannot go to the fourth one. Okay, so look here. What do you see? What do you see over here? Okay, is there a pattern or whatsoever you see? If you look at this very well, I love the bodies. I don't love the wicks. Okay, if you draw your line over here, you can see something like a multi top. Okay, a multi top. Okay, a multi top. Okay, okay. If you read Shabaka's book, you know about multi-tops by now. Okay, so this is just a death center. That's what Shabaka calls it, a death center. Okay, this is a death center. You can see they're sending people up, they're sending people up, they're sending people up. Okay, and then all of a sudden, let's see what they give us. Okay, because if we are unable to identify who's trapped, obviously we do not move to the next criteria. What do you see? A right angle triangle. Okay, for someone, what did they see? Others obviously saw a shoulder and a head and shoulder. Okay, they saw a shoulder and then another shoulder over here, because you can see prices came and bounced here. Okay, and they saw a head here. This is that a head and shoulder which has double heads. It's there. I put it in your playbook, and it's there out there. If you reach Shabaka, you'll actually find it. Okay, so you see here, we have a combination of patterns. We have multiple tops. We have a head and shoulder, and then of course, most times a head and shoulder will give you a right angle triangle. So this is a right angle triangle. So there are almost 3 patterns in this, and what this tells you is everybody going up is literally trapped. Everybody going up is trapped. Okay, and as you can see, they break out, but this is not an evidence candle. Why? Because you can see they did not close beneath the death center, right? They came back in, they gave, yes, something like a consolidation, which is good, and then this is the first candle that closed outside uh outside the right angle triangle or the head and shoulder. Okay, this is the first candle that closes outside. So this is highly important. Okay, this is highly important. And what we do, we use a 1 candle stop. Okay, so this is a 1 candle stop. Okay, okay, this is what I took, and then they closed me. Okay, I saw this, they closed me with this candle. Okay, but again, as it now went back in and came and closed here, it's closing at the same point, you can simply see that this is a stop hunt. That's where I took another entry. Okay, if you go to the video I posted earlier on, honestly, I went way too deeper into this. Okay, if you go and watch that video, if you are new, you'll understand it. I posted it early today. Okay, you'll understand things in a very deeper manner. Okay, because I went deeper and deeper and deeper. Okay, so as you can see, I took this one. Okay, and we have trap volume down, and most of the time they're not gonna release this, guys, right? So we trade with caution, but for us it's not a big deal because we are literally targeting 50 pips. Okay, so you can see, okay, 50 pips was actually hit just after they passed this level. Okay, so this is where I exit my position, and then yes, they keep going down, and the reason I exit here is because I'm targeting 50 pips, and for indices 50 pips shouldn't be a problem. I know people will say, but you are leaving a lot on the table. It's not about leaving a lot on the table, it's about something you do each and every day. Okay, remember, there are days when they'll go roughly 80 and come back, sometimes roughly 65 and come back. Okay, so you need something that you can do each and every day, because today, yes, I might have left a lot, but then the following day they might close me if I'm holding for many pips. And as I always say, it's not about the amount of points you get, it's about the quality, the quality. Okay, so you can see we have criteria number 3, which is okay, criteria number 1, criteria number 2, criteria number 3 is literally met. Okay, we have a chart pattern. Okay, this is a pattern. Okay, and the reason we use a chart pattern is because we don't know what the market makers or insiders are literally doing. However, when they give us a chart pattern, now we know that okay, this is what they've been busy with and this is what they're doing. Okay, so since we got the chart pattern we tick, now we can go to the 4th criteria. Okay, because this is a prerequisite for going to the next criteria. Okay, so now this is where we got the evidence candle. Okay, as I'm saying, yes, they did close, but again they gave another entry. Okay, evidence. Okay, and what I used to do initially was I used to enter and then close my chart, come back after an hour. But these days I've been practicing this for quite some time now. I want to stay because mostly they give an opportunity to scale in. Okay, where they pull back and then they continue. Like even today, if you used bigger stops, roughly 25, okay, they came back, but if they didn't close you, obviously when this candle closes, it's another opportunity to enter into your second position. Okay, which is highly important. Okay, scaling in is important. Okay, because if you get maybe 2 opportunities to actually scale in, now you are in 2 trades. Okay, and if you are in 2 trades, obviously what's gonna happen is you're gonna make more than somebody who's waiting for 100 pips. Okay, so guys, this is highly important. Okay, so yes, they did give for those who at least have bigger stops, but for me I prefer tight stops, because if I'm wrong I want to be closed immediately. So when this one I closed, I knew I wasn't wrong, they just gave a stop hunt. And besides, this is These are things that happen over and over again, and I explained that early before these things have actually happened. I explained that in a video I made earlier on. You can just go there and listen to it. Okay, so you see what happens. They break down. Okay, so we have a move that is broken down, then they start creeping. What happens afterwards? They collapse. This is what we spoke about on the creeping trend, but I didn't take this one. Okay, I didn't take this one, mainly because you see this one was so big, the candle was so big. But this is what is in your playbook, where I told you to actually understand the different kinds of trends. Okay, that's where you see that, okay, now they gave something. You see a creeping trend. It's under creeping trends. You can just find it there, and they gave another opportunity, but I didn't take this one. Okay, I'll show you what I took. Okay, let me just deal with US 500 and just get done with it. Okay, so look, there's something I want you to see. They went down, and they released these guys. Okay, if you look carefully, they did release these guys today. Okay, let's just go and zoom like this. Yes, they released them. Most of the time they won't release them, hence we are careful. However, releasing them came in the form of a stop hunt. Okay, and immediately they reverse. So this is something we always try to avoid, hence why we identify trap volume before the session begins. I explained this in the early video I posted today. Okay, I did explain all of these things. Okay, so you can just go there, you will see it. Okay, so I'm gonna remove this line over here because there's something happened again. When you zoom this thing out here, you will see something very important. You see they came down. Okay, what did they give here? They gave a shoulder. This is a shoulder. Okay, this is a shoulder. I want to show you something very important here. Okay, I know that if you haven't mastered patterns, you'll have to master patterns, guys. They are there in your playbook. All these patterns I'm showing you are there. Okay, they are there in your playbook. You can just go and find them and just make sure you master them, and when you come to the charts, you know exactly what you are looking for. So you see this is a head and shoulder. Okay, where is the neckline? The neckline, you see they made, okay, the shoulder, and then they pull back. Okay, and this is the highest point they've reached. So when you do something like this, okay, because this is where they bounced before making the last shoulder. Okay, so this is another opportunity that was so clean. I will show you something in a minute. Okay, I'll show you something in a minute. Okay, my goal is for you to see these things in real time because this is the most simplest strategy. I'll show you this in a minute. Let me show you something quite quick over here. Okay, if you look here, they gave this head and shoulder. You see, all the patterns you need are in your playbook, guys. They gave this kind of head and shoulder. Just look at it. It's you see page 13. You see shoulder, head, shoulder, which is a descending head and shoulder. You see, it's a descending head and shoulder. This is the exact pattern they gave. Okay, because we have a variation of head and shoulders, and as I told you earlier, I'll show you it again. You see they gave this shoulder, head, shoulder. You see this one has what? Two heads. Okay, it has what? Two heads. So if you look carefully at this one that has two heads, you realize something. Let me show you. You see here it made a head and a head. So this is the kind of head and shoulder that has something like two heads. Okay, I've just showed you it on the playbook. So everything you need is literally on your playbook. Okay, just look at it. Here it is: shoulder, head, shoulder. Okay, so that's what they gave. Today we got this pattern, and we got this pattern as well. There are many patterns I've showed you on this playbook, and different days you're gonna get different kind of patterns. Okay, and if you read carefully right here, I told you they will do three things. Prices may break out and start trending in the direction of the breakout. Prices may break out, retest the neckline. Okay, this is what we got on this one. They broke out and they retested. Okay, so for me it's still valid if they just retest and then continue in the direction. Okay, it was still valid. Okay, as you can see here, they broke out and gave this evidence candle. However, they just went up and then pinned here and closed here. Okay, that's why I'm telling you I took another position right here. Okay, so I hope you understand. You now know what you are looking for. Criteria 1, identify trap volume before the session. Criteria 2, wait for the equity opening time. Criteria 3, identify trap volume during the session. We use chart patterns for this. Okay, we use chart patterns for this, and then when they give you an engulfing candle, that's where we execute. Okay, and then yes, they went down. The main idea we had is like mostly they're not going to release these guys. However, today they released them, and the release was the stop punch. You can see these candles were railway tracks. Okay, railway tracks are candle like like they are like railway tracks. Okay, it's a candle that is an engulfing candle. It goes down, and immediately the next candle is an engulfing candle to the opposite direction. So what this does is actually it explodes to the downside, and people tend to follow it. Remember, most people are using motions, so people tend to execute a sell here because now they think prices are going to explode down. Hey, they're going down, 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 just to find that the next candle you are at a loss immediately. And that, as you can see here, they shift the zones. Okay, but that's not all we got today. Okay, that's not all we got today. Okay, look at this. Now we are looking at a bigger picture. Therefore, I'm going to use some big text over here. Okay, look at this. This is a shoulder. Okay, we have another shoulder here. Okay, and then obviously we will have our head is the main head of the day. Okay, this is the main head of the day. So you can see this is a pattern within pattern Shabaka. You'll see this a lot on Shabaka. Okay, so still again, if you miss this head and shoulder, of course, which was in your playbook, because it's shoulder, head, shoulder, and this is the evidence candle because now it broke the neckline. I just showed you this on the playbook. Okay, just look at this. Okay, so that's where they exploded, and after exploding, of course, they gave another opportunity. You see, they pulled back and closed here going up. So this is another place for entries. Okay, taking another entry. And let me just show you what I mean. Okay, let me bring in something interesting. Okay, let me just say something interesting. If you look at here, we have a 50 EMA. Okay, it's fine, I'll use this color. You see the 50 MA. Wow, perfect. Let's bring in another EMA. Okay, we're gonna bring in a 5 EMA, 5. Okay, 5. You see it's a yellow one. We're gonna bring in a okay, let's bring in a 9 EMA, and then we could just gonna change the color. We can choose blue, we can choose green, any color that we think of is okay. Okay, but we are using blue line, so I think it's gonna kind of mess up with things. Okay, let's choose dark green. Okay, we can choose dark green. Okay, yes, it's perfect. And now we're gonna bring in the 20 EMA. So before you ask what kind of EMA I put here, please just listen to the video again, because I know many people are gonna send me emails and ask what kind of EMAs I put here. Just re-listen to what I said. I said I'm putting in the 5 EMA, the 9 EMA, the 20 EMA, and the 50 EMA. Okay, so I actually use 4 EMAs. I'm repeating: 5, 9. Okay, it's 5, 9, 20, 50. Okay, please don't ask this question. Okay, because I get the same kind of questions a lot of time. I'm not saying it's wrong, I'm just saying okay. So you see, this is the engulfing candle, which is an evidence candle. They gave a beautiful entry. Okay, and then again they pulled back. Still again, you are safe. I told you these days I'm actually scaling in more. Okay, and then this is where they closed again inside the 50 MA, and then that's where I put in another entry. Okay, because my main thesis was if they're gonna come back, at least they're gonna come back and hit here. So if they come and hit here, obviously they will give 50 pips. Okay, they will give 50 pips. Okay, or 50 points, as you can see. Okay, both of these ones delivered. So that was my main thesis. Okay, my main thesis. So you can see two positions. Okay, it's two positions. The first one is a one candle stop. You can see here. So when you are scaling in, I want to show you something very interesting. When we are scaling in, it's a one candle stop, it goes, and then as it goes up here, you open another position, and then you trail your stops to this point. Okay, because the main idea is not to over risk. The main idea is to be on the safer side. Remember, the main idea is to preserve your capital. That's the first thing. Okay, so now you are in two positions, and of course the first one is at break even. Okay, so that makes a lot of sense. Okay, you're just trailed, and now you're in two positions. They are going, both of them hit 50 pips in at different times. Okay, so you got more. Okay, so somebody will say, but you left a lot on the table. It's not like I left a lot on the table. Okay, because this might not happen tomorrow. Okay, so I want to build something on something that happens over and over and over again. And besides, now I have two positions. I can leave one to just keep on going and going and going and going and going. Okay, so since now they gave a different head and shoulder, this is another opportunity for an entry. Just want to show you this, okay? This is now a different opportunity for an entry, okay? So now you can be in 3 positions, and of course when you enter your 3rd position, you trail all your stops to here, okay, just to make sure, or I mean to here, to 1 candle stop. We usually use 1 candle stop because if we are wrong, we want to be closed immediately. I hope this makes sense to you, okay? I might not be able to go to others because the video is long already, but I believe this makes a lot of sense. So that's how you scale in. And the reason I'm scaling here, I know it's already too late. I'm only doing that because I got a bigger head and shoulder. Remember when it comes to like trends, we have like the minor. Okay, there is a minor trend, there is an intermediate trend, there is a major trend. So you have to understand that if this is the minor, this is now the intermediate. Okay, so yes, of course, I will add another position here. So this is what I do, okay? This is what I do. And of course, if I'm adding here, I'm trailing all my stops from earlier on, okay, to here. So even if they close you, you are still at a huge amount of profits, okay? Then you can hold for another 50 pips, okay? Because we don't know how long they're gonna go, okay? So guys, this is the most easiest way to execute. But the most important thing is to be like to train your eyes to see patterns. We have different patterns, we have many patterns. If you look into your playbook, just see the number of patterns I put there, okay? Hence I took my time to actually, I know people were completely were always asking question, when is the playbook coming out, when is it coming out? Is because I had to put a lot of patterns there, okay? So everything you need is also there. So guys, just look at this. Easy. You took easy positions, okay? I don't know if I should go to this one again. This one seems to be coming pretty much common, okay? It happened last week where they now give you something like this, okay? They are on the line, okay? I'm just in the session now, okay? For the sake of time, I'm not gonna go and identify trap volume. Look at this, okay? Okay, if you look at last week, I did a video. I think it was Thursday, Friday. I don't remember if it was Nasdaq or what. Let me just try to see, but it's gonna consume a little bit of time. Okay, they did give this pattern. If it's not Nasdaq, is on S&P 500. Oh, okay. I think it's might be on S&P 500. Okay, where they actually gave this kind of pattern. Okay, this kind of pattern where now they are doing this, and now they are just giving a right angle triangle, but they're no longer coming down here. Okay, we got this pattern last week. Honestly, I think it might be S&P. Oh, unfortunately here I have the EMAs and it's just gonna cloud everything, but we got a pattern like that. I don't remember on Thursday or Friday, but anyway, you can just go to your chart, you'll see. Okay, we got a similar pattern to what we got today on Nasdaq. Okay, if you look at Nasdaq, we got the same pattern here. And what did they do? This is obviously a right angle triangle. Okay, and the funny thing, or what makes it very interesting, is because it's at a level right now, right here. Okay, so just look, you see, that's where they give you an engulfing candle. Okay, they give you an engulfing candle, beautiful engulfing candle, and then they pull back and engulf again, which is another it's another opportunity for entering your for actually increasing your trades, adding on, scaling in. Okay, first stop is here, and then when you scale in, obviously now you don't want to be risking double. Okay, you can just come and put 1 candle stop here. Okay, so this is a right angle triangle. If we bring the EMAs in that I've just used, you will realize that we are getting almost the same thing. Okay, we are getting almost the same thing. Okay, so let me just bring one EMA for the sake of time. I'm gonna bring in the 20, which is the most favorite one. You will see that, oh, okay, now everything is in. And something I didn't explain here is that when you bring the EMA now, you realize that, okay, all the like prices are below all these 3 EMAs. Perfect entry, but you don't need all. You 3 is enough. Okay, and then this one can help you for actually increasing or scaling in, as it did here. Okay, these 3 actually crossed there, so you can see when this candle closed, all the EMAs had already confirmed to you. Okay, just for extra confluence. I'm not saying you need that, but okay, let's actually do this here as well, because it's not about time, it's about understanding. Okay, let's go and put in a 5 EMA. Okay, and then we're gonna put in a, I already told you, gonna put in a 9 EMA. Okay, a 9 EMA, and I'm gonna choose like dark green. Okay, yes, and then I'm gonna bring in the 50th EMA. Okay, This is just for extra confluence. I don't say you need it all the time, but if you feel like you need it, it's just for extra confluence. Okay, you can see now. You can see now. You see the move is inside all the EMAs, which is important. Okay, it gave us a sign here that okay, something might be building up. Okay, and by the time it happens, already we know. Okay, and that's when obviously 50 pips is granted very quick. Okay, 50 pips is granted very quick, very quick. 6 minutes. I told you on average my TP is hit around 4 to 6 minutes. That's what I told you, and I wasn't lying to any of you. I told you. Okay, so most of my days it's gonna be in roughly 4 to 6 minutes on average. Okay, even though there are days when it will actually go to 30 minutes, but if it goes beyond I'm not comfortable, I close that thing. Okay, because this is supposed to explode. So even now, because these ones are correlated, I will show you something. Let me just show you. I know, guys, I'm showing you a lot of things, but just try to pay close attention. Firstly, we got a major. Okay, but this one we only got it later, so we can't talk about this because this only happened later, and it gives us, say maybe you are in a trade. Okay, maybe you open two positions and you're allowing one to run. This gives you extra confluence. I'll show you in a minute. Okay, so let's put this head down here, and then now we're gonna go to the minor pattern. Okay, same thing as we got in S&P 500. Okay, you see this is the minor S, and this is the minor S, and this is the minor head. Okay, which obviously is the major head as well. Okay, I mean the intermediate one. Okay, so look at this. We have a head and shoulder. If you missed this one, guys, you have this big one. Okay, look at this. So beautiful, so beautiful. You see, this is where it closes. This is where it closes. I just hate my charts when they are so messed up like this. But anyway, these ones will also help you confirm. I only bring them in once the trade is in, but I don't usually use them all the time. I use them rarely. I used to use them when I was still starting. Okay, because I needed a lot of confidence, but now I know these things. Okay, and how they happen. Exactly, this pattern is it's literally this pattern. You see, it's this one: shoulder, head, shoulder. Okay, so we have different kinds of patterns. Yours is to master these patterns. Make sure you understand them. Okay, because that is what is important. Okay, that's what is important. So you see here, it's the same: shoulder, head, shoulder. The same thing you just saw is this one, and then when it closes, obviously this is where all the three EMAs crossed each other. If you were doubting this move, you can just take it. And again, when they crossed the 51, you see they came down and they closed here. Okay, this is an opportunity for actually entering into another trade. And I know that people who want to average a loss, you don't average a loss. Okay, you only add when you are winning. Okay, you only add when you are winning. I'll show you something that I did on GJ in a minute. Okay, on how I also added on GJ. Okay, look at this. First opportunity here, second opportunity here. Okay, yes, this one obviously hit profit a little bit later, but again, look at this. Wow, this is so beautiful. You see, now this is a different kind of a head and shoulder. Now it's the head and shoulder where the neckline is sloped up. If we go to the playbook, we're gonna find it. It's there. Okay, it's this one now. You see, the neckline is now sloped upwards. Okay, so all the patterns you'll ever need are here. Okay, just pick your playbook, master. Practice this on a paper. Practice these patterns. Okay, go to your charts. Spend time there identifying patterns, because when you know the patterns, obviously everything else is gonna make sense. Okay, everything else is gonna be easy. Look at this. Look at how easy this is. Okay, look at how easy this is. Look at how easy this is. Okay, even before this one break already, because you are in a move that is going up, you could have seen that here's another position, here's another opportunity for an entry. Okay, you don't enter when prices are actually moving up. For me, I want to see something like going down, and then that's where I always scale in. Okay, so obviously if you scaled in, you took your 50 pips yearly, but since you were able to actually open three positions, you can hold one, but preferably I will take. Okay, I just want to take and get off the screen. Yes, it can keep going and going, but not everything is yours. It's not about actually milking every single pip out of the market. Okay, and as I've said, of course, Here we got a right angle triangle. This is the candle that closed outside. Okay, it's an engulfing candle that closed outside. Same thing every day. Okay, if you don't have trap volume during the session, which is to say, if you don't have a trapping pattern, there's no need for you to take the trade. Okay, there's no need for you to take the trade. And then again, they gave the same pattern, but this one wasn't as clean as the ones we got there. But again, it was a right angle triangle. Please, 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 I'm not going to go through this one again, okay, because the time is already 30 minutes and I wanted this to be less than 20 minutes, okay. But look at this, guys. Same things every day. Just put in the EMAs, you'll see, okay. Same things each and every day, every single day, same thing. If you targeted 50 pips here, 50 points here, you got it, okay, you got it. And then they kept going and going and going and going and going. So guys, for those who really are not aware that, okay, if we are in opportunity, you think they're going to go down because indices are capable of going down, or maybe because they've been going down for quite some days, you think they're still going to go, and you enter here and you don't have a take profit, you just want to make the maximum take profits you can, you come back, you find that they've closed you, okay. So they are tricky, but one thing they cannot hide is their footsteps. And once they've trapped, they are gonna punish, okay. And of course, these were easy trades, okay. Okay, even here, if you look at carefully, you will see the patterns. Okay, so guys, as I say, patterns always help us know when not to execute, okay. So if a pattern is not there, honestly, why are you executing? Okay, that's a recipe for a disaster for yourself, and then you only have yourself to blame, okay. Or if you are now saying, oh, this is an engulfing candle, this is an engulfing candle, now you want to execute. Because even if you came and said, okay, now this is okay, maybe you remove this, maybe here, okay, maybe here you remove this, okay. Yes, of course, you might have taken a long position here, but it's also about paying close attention to the level and what is happening at the level here, okay. Because obviously you need to be on the safer side. If you took this and you lost, obviously it makes sense because now you understand the patterns, okay. But one thing I would say is, mostly these things are going to be correlated and they're going to help you understand what is happening, okay. And patience really help, okay. You need to understand who is actually being trapped, when and how. And sometimes, of course, I told you they will give an evidence candle and then do the opposite, okay. So it's still okay, but you see this is amazing. This is amazing. Two beautiful patterns on the day, okay. They gave you when they went down, and of course they came and paid you, okay. Target 50 pips, 50 pips was hit in 10 minutes, let's say in 12 minutes, okay. And then again you target 50 pips when they break out of here, okay. Maybe you took this one because this one wasn't like you couldn't trust it. You see 50 pips hit in 13 minutes, okay. They gave you a beautiful engulf again. If you were to scale in, you can see, if you were to scale in again, your take profit was hit quick, 14 minutes, okay. So it's mostly less than 15 minutes, okay. So guys, everything is here, everything you need is here. And remember, you cannot look for the evidence candle if they haven't given you a pattern, okay. Yes, sometimes you look for an evidence candle, everything will be perfect and you'll still lose. It's still okay, it makes a lot of sense, okay, because those are prices, okay. Sometimes the risk you have, the one candle risk, is the amount you pay to know if you are right or wrong. And if you are wrong, you want them to close you right away, okay. You don't need to stay long enough to know how wrong you are, okay. And just lastly, if you come to GJ just exploded down today. If you look at it, okay, it just exploded down. Since morning it just went down. And then when the US session opened, I realized something very interesting on GJ, okay. I realized something very important, okay. You see, yes, they came down, and then they went up, okay. I was on a 1 minute time frame. That's what I really prefer using, okay. You see now, you see what happened. Yes, when they went down, we didn't have a clear pattern, but one thing we knew is that they were making lower lows, and all of a sudden this becomes a higher high. These are currencies, okay. So I don't usually use the same thing I use for them, okay. So this was the first higher high, and then they started giving a right angle triangle going to the upside, okay. And then when I got this one, I actually executed on this candle, okay. This is the candle I use. These are currencies. the risk is way too less as compared to indices, because even this candle wasn't big enough. Okay, this candle wasn't big enough. Okay, you see it was roughly 7, so I put my stops below this one. Okay, because 7, I don't really love keeping my stops too tight, so I put my stops here. Okay, and then I entered, and then yes, they pulled back. Obviously they will break out, go, breakout, pull back, and then go, or breakout, pull back, reverse, or breakout, pull back, and continue trapping. Okay, so those are the possibilities that the market has. However, we don't really care about that. We want to execute. And all I can say is, as Peter Brandit always says, throw a mud on the wall, and if it falls, move on. If it sticks, hold on as much as you can. Okay, so when you throw mud here, obviously this mud sticked. Okay, there are times when you throw mud, okay, and then they just break out, and then they reverse and they close you. That's still okay. Okay, because trading is more about throwing mud on the wall. You throw mud. Okay, you throw mud when an opportunity appears. You throw mud on the wall. If it falls, then you know you're wrong, you move on. Okay, but if it sticks, ha ha ha, you are in. Okay, so look at this. I opened 2 positions on this one. Okay, I no, was it 2? No, yes, I opened 2 positions, not 3. I took a position here and I took another position here. And I always say, do not average into a losing trade. That is to say, if you are losing here, don't say, okay, now they are going down, I'm buying. No, you need only to execute when they've given you evidence. You see, now this is evidence that they are going out, they are going up already. They've broken out. So this is just a retracement. And to be sure that this is a retracement, they give us an engulfing candle. So this is where I entered the second position. Okay, and as they went up, already I was in 2 positions. I waited for them, and then when they broke out of the mini pattern here, because even here they gave something like a right angle triangle. Okay, a right triangle triangle. And for currencies, usually mostly this is going to be a continuation pattern. Even for indices, it might be a reversal or a continuation. Okay, when they actually closed on this engulfing candle, that's when I trade all my stops from below here, and I literally just came and placed them somewhere here. Okay, I placed them below this pattern. Okay, so already I was in a break even. Okay, and then as they went up and up and up, up and up, and then I took 50 pips. Okay, I took 50 on 2 positions, which was pretty good for today. So guys, today was Monday, a very beautiful day without news. Tomorrow it's a beautiful day again. Okay, it's gonna be a very beautiful day. So whenever we have news during the equity opening time, just wait for the news to trade, and then wait for the dust to settle. That is to say, the impact of the news to settle. Then that's where you'll get your own opportunity. Okay, so guys, I really appreciate you. If you are new, hit the sub button so that you don't miss more, because this is the most easiest strategy, and you know exactly what you're looking for, which simplifies everything for you. So guys, sorry the video is too long. However, all you need is in your hands right now. You just have to go and put in the work. If you don't put in the work, because people tend to say, oh, this is too easy, this is too easy, this is too easy, and then in a couple of days or in 2 weeks, they are nowhere to be found, simply because now they realize that, okay, they didn't put the work. Now they don't see the pattern. Sometimes they think they see the pattern because they haven't practiced. Their eyes are not trained to see patterns. Now they think, oh, I saw a pattern. Now I took this one, I lost. No. Okay, don't do that. Okay, don't do that. You need to know when you're practicing, there's a lot that's going to be revealed to you. Okay, and that's what will make the difference. So go and master the patterns, master the trends, and guys, master the patterns are very important. Okay, master the patterns. I will repeat, master trap volume during the session, because once it's there, mostly it's gonna get punished. If you take a loss, obviously that's part of the business. Okay, sometimes you will execute exactly as required and you'll take a loss. That's not a problem. Okay, if you know how to trade, you'll know it's not a problem. Every trader lose. Okay, even big traders do lose every day. Hence why one of the best traders, Peter Brandit, said for him trading is like throwing mud on the wall. If it falls, he moves on. If it sticks, that's when he wants to hold. If you listen to Paul Tudor Jones, he says he thinks of each and every trade he makes as a loss, just to show that if you take a loss, it's not a problem, guys. It's not a problem. Okay, one loss here and there is not a problem. You just need to know and stop thinking that today I took a loss. Tomorrow I took like yesterday I took a loss. Today I took a loss. I'm dumping the strategy. I'm gonna look for a better strategy. you'll spend roughly 10 to 20 years trying to find a good strategy, just to find that everything you're finding, you'll have a couple of losses here and there. Guys, I don't want to make this video any more longer. I really appreciate you. Have a beautiful night. Thanks.